Shifting our focus over to the grain markets now. This week we were joined by Doug Simon from Tredas here in the final trading week of September. The month is living up to its reputation as being one of the toughest months for bullish sentiment. We began the discussion with Doug on Wednesday afternoon by getting his general take on the grain complex.
There's big basis opportunities on corn right now. We've been trading anywhere from 40 over to 70 over, and so we've been recommending, asking, farmers, hey, let's move some of that corn right now, get it in there. It's a really good basis. We may get back to those levels later on in December, January, February, March, but that's a tremendous basis to be selling right off the combine today. With 670 futures and 40 over basis, that's a good cash price.
What are you hearing in terms of yields out there with the customers you serve?
Well, I grew up in east of Lincoln here, south of Omaha and Cass County, and our yields out there are running 120 bushels to 150, maybe a little better in some spots, depending on where they had better rains and better soils, but about 100 bushels less than probably what we had last year. Soybeans are running in the 30s, 35, 40. Even irrigated yields kind of up, Highway 81. On the soybean side of it, down from what they were last year. So, but the amount of rain that we've had, we expected them to be lower. Probably the one thing is like the irrigated corn, irrigated beans is going to be interesting as we get into deeper into harvest to see how those yields hold up. Some disappointment right now from what I'm seeing so far.
Let's talk about some of the factors influencing the commodity trade. Look at our corn soybean charts here. We haven't seen a lot of strength in terms of rallies in the month of September. What are some of the factors influencing that?
Well, we had the high this summer on Dees corn was at 760 and we fell to 560 and now we're back to 670. So we had the $2 range there and now we've rebounded. Actually, we were back 50% of that range. We did go up close to $7 after the last USDA report when they dropped the yield 6.5 bushels. And the beans, we were $13 low kind of recently. We were 16 this summer in June, then went to 13, and now we almost went back to 15 after the report as well. So now today we're just 14.10 or so on no soybeans. So we're still $1 off the low, $2 off the high. So we've had quite a bit of a rebound actually. So the question is, are we going to continue on that trend? I think it comes down to what we're going to see at September, end of the month. We have the stocks report, which will be real interesting to see how much corn and beans are out there and how much we drew down those stocks, which seem to be pretty tight based on the basis levels that we saw out there. So, but then our next report in October, USDA is going to weigh pods and weigh ears, and we'll see, that'll be the biggest survey. We talk about yields from what we see with farmers we're dealing with, but it'll be interesting to see what USDA sees in those weights out there and how it's all going to add up.
Well, Doug, I know you've been keeping an eye on a lot of things lately. One of the things is the dollar, because we've seen 20-year highs, if I believe I saw that right. Also the interest rates out there. We saw the Fed increase that. What do you want to share about those two things?
Well, we've been in a 30-year rally in the bond market, the 30-year bonds. They've gone from 92 or 95 level in 1992, and they've had a peak in the middle of COVID in March of 2020, around 200, and now they've fallen back to 125. So as the government's tried to kind of squelch inflation, they've been increasing interest rates, so the bond market's been dropping, and so that's had a pretty significant impact. As those interest rates increase, it basically attracts investment in the U.S. And so people have to buy U.S. dollars to invest that money in the U.S. So, people are surprised, like all the strength in U.S. dollar, like all the things that are going on in the world that are crazy and volatile. But the U.S. is still probably the strongest economy out there in the world. That has something to do with it. But also those interest rates are attracting more money into the U.S. So it's kind of it's not all that, surprising. But it also has an impact on our trading partners. So the pound, for example, hit a low this week. So everybody's worried about that. But really, who imports our corn? Mexico, China to a limited degree, Japan, South Korea. Those should be the ones that we're concerned about in terms of those exchange rate values. So back in the 80s when we had really strong dollar, we were worried about that impacting corn exports. Corn exports are lagging about 10 points where they typically are this time of the year. The beans are a little bit ahead of pace, which is good. But the big picture is that, how much income do people have to buy our commodities eventually?
As we round out this conversation, Doug, I want to see if I understand your perspective right when it comes to this harvest time. You're saying haul as much maybe as you can to town when it comes to corn, soybeans, and play maybe on whether it's the safer side or not on the futures market. Do I understand that right?
Well, I think with the basis levels being as firm as they are, that you want to move, that's the signal to sell your cash grain. So where the futures are going to go from there, you don't necessarily know. But if you look at commodities seasonally, December corn tends to put in a bottom here later in October, tends to have a rally post-harvest. If you look at soybeans, it tends to happen about this time of the year and rallies in through May. So if you look at years where like our fall prices are higher than our springtime price, we tend to have more rallies. So, I mean, which is because of the lower crops, I mean, we probably should see some strength longer term. So if you want to keep ownership of beans, it's easier to buy some, instead of paying storage at the elevator of 6 to 8 cents a month, use calls, or you can buy the board, you can do some things, but that's going to be cheaper than just paying storage at the elevator. There's cheaper ways to do it, maybe less, you know, in terms of you don't know where the direction of the board is going to go, but it's definitely less expensive than stored in an elevator.